surrender and that it rejected it. Reports that nearly half of the population of Kyiv has left. The U.S. says it has concerns that Russia may use chemical weapons. EU leaders met today. EU Commission President Ursula von der Leyen says that the major takeaway is that the EU needs to lessen need for Russian energy. U.S. is slamming China and Russia for pushing a conspiracy theory that the U.S. military runs biolabs in Ukraine, just saying that the reports are false. The U.S. is preparing new penalties against North Korea after it says it determined that Kim Jong-un tested new ICBM technology in the missile launches February 26th and March 4th. A powerful storm moving toward New York City and Boston, combining with another front moving up from Alabama, may join to form what meteorologists call a bomb cyclone. Very heavy weather for the weekend. United Airlines will allow 2,200 unvaccinated employees to return to work this month. Meanwhile, the U.S. has extended its requirement for passengers on airplanes and trains to wear masks for at least another month. Moderna says that it has started a study of a booster shot that works on Omicron, and this year's flu vaccines, if we don't have enough to worry about, this year's flu vaccines are not preventing this season's dominant strain from causing mild or moderate illness. In San Francisco, I'm Ed Baxter. This is Bloomberg. All right, Brian.
All right, 9.5 minutes before the top of the hour. Let's take a look at the media. From the Nikkei, Toyota stopped production at 2 factories in Japan due to a cyber attack on a supplier that caused it to suspend all domestic production earlier this month. From Yomiuri, that Japan's government is considering administering a 4th shot of the COVID-19 vaccine. That could happen as soon as this summer. And this is interesting, looking at the South China Morning Post coverage of some of the testimony from the U.S. intelligence community. China overestimated Russia's ability to achieve a decisive victory over Ukraine. Moscow overestimated Beijing's support, and the U.S. overestimated Russian military prowess. U.S. Spy Chief William Burns said that President Xi's own intelligence community doesn't appear to have told him what was going to happen. U.S. officials have admitted that, despite predicting that Russia would invade and getting that approximately correct, they had underestimated Ukraine's ability to defend itself. From CoinDesk, 9 Republican senators have introduced a bill aimed at setting up regulations concerning the digital yuan. The efforts being led by Bill Cassidy from Louisiana and Marsha Blackburn from Tennessee. Senator Blackburn said if left unchecked, technologies like China's digital yuan would empower Russia to evade global sanctions on systems such as SWIFT. She said it was also enable the CCP to further surveil and threaten its own citizens. And finally, no, I think that is final. I think we need to get to yes, so I'm going to throw it over to Rashad.
All right, well, joining us now is Yishie, Bloomberg Bond and FX reporter, having a look at the market news of the day. A day dominated by that inflation print. Bond markets certainly looking at closely, but the Federal Reserve even closer, right?
Yes, absolutely. The inflation number, although it's coming relatively in line with market expectations, it's still at 7.9% year on year, the highest in 40 years. So apparently people are quite concerned about the inflation. People are looking for inflation peaking. Should be peaking now, but given the situation in the energy price, commodity price following the Russia-Ukraine war, we are going to see continue, at least the headline inflation is continue going to moving higher in the coming months and months.
I wanted to ask you as well about the big sell-off in Chinese shares. It seemed to catch a few people off guard. I mean, we've seen a lot of selling, so that part's not unusual, but just to have a 10% move in the NASDAQ Golden Dragon China Index is quite substantial. I was mentioning earlier this morning that Alibaba was down another just about 8%, and it puts Alibaba right in the approximate range of being down 70% from its all-time high. It's not very often you see a stock decline 70%. It's amazing.
Yeah. Absolutely. It's incredible how much of the Chinese tech stocks like Alibaba has crashed. What happened today was actually the SEC, they didn't make an announcement. They actually quite quietly put a list of 5 Chinese companies on its website, basically saying that they are these companies that on the list for failing to let the U.S. auditors to audit their book. To recap, that the U.S. passed the law in December 2020, basically asking the Chinese listed companies to open their books for the inspection for the U.S. And the Chinese government didn't allow that practice, so they've been in this tug of war for a while. According to the law, all the Chinese list companies will be delisted if they fail to comply with the auditing instruction for 3 years. Now we are in the process of implementing this law. So this is not new per se, but this is a step towards moving to the delisting. On top of that, we have very fragile risk sentiment now, so we see quite a lot of sell-off today.
This begs the question, do investors think that this might be the floor? It's again, to use that old adage, trying to catch a falling knife. What's the general view?
Right. So from the valuation perspective, it's quite cheap. If you look at Alibaba, it's trading like a utility company, or even cheaper than utility companies. So the valuation comes down a lot. And the position has been cut because all these regulatory risk and the geopolitical risk we've seen over the past year, a lot of positions have been cut. And so from a valuation position perspective, it's much cleaner. What they need is some sort of a sentiment to turn around. Either there's a very clear cut in terms of the ramping up of regulations, or there's a positive progress regarding to the de-risking risks between the two countries.
Yes, I wanted to ask you about China and its role in Ukraine and whether or not Xi Jinping wants to be a mediator, whether or not that is possible. We had some comments from the former USTR, Robert Zeller, who's a pretty highly regarded person and has a lot of insights into China, saying that the smart move by China would be to push Putin to peace. Is that something that how uncomfortable is China with the current status?
Yeah, the war definitely caused China in a very uncomfortable position. I think this is a position that China has already been adopting, basically asking them to stop the fighting and start talking. And but they fell short of calling this war as invasion by Russia, because they don't want to damage their relation with Russia. But at the same time, they also try to especially maintain a good relationship with Europe, given the current very tense relationship between the U.S. So they don't want Europeans put China and Russia in the same kind of category. So
the whole world,
tough balance. Yeah,
the whole world is starting to think both are pariahs.
So the support that China gives to Russia so far is all like a rhetoric without breaking all these sanctions. So they don't want to see the one who's sort of destroyed the world order. So it's a very uncomfortable position to be sure for China.
Certainly, I think it was Lord Palmerston, the former British Prime Minister, who said that if you look at the country's trade policy, you can actually see their foreign policy, and this is perhaps what's playing out. So in essence, how much of this is priced in, that the rapprochement between Russia and China is a bit of a cold one? Very quickly.
Yeah, we definitely see some sort of eating of the tension in the last 2 days. If you look at the commodity space, oil is down like $30 a barrel in terms of WTI prices, and the wheat prices down like 10-15% from the peak. So at least there's some expectation that maybe we are getting closer to the end, but this is a very fluid situation for sure.
Okay. Yes, thank you. Bloomberg Bond and FX reporter, bringing us to the top of the hour. This is Bloomberg. Now Bloomberg's traffic and weather. Hudson River Crossing for this Thursday ride home. Holland Tunnel 30 minutes out, 10 minutes in from 1 and 9. 30 out, 10 minutes in aboard the Lincoln Tunnel. Getting to the George Washington Bridge, so quite a challenge this evening. Looks like a very heavy ride now coming up the west side. And one of the things now compounding the problem, a southbound accident on the Henry Hudson in the mid-90s. We've got two-way delays from the FDR 90 to the RFK Bridge. Northbound very heavy up the Harlem River Drive, also coming up to Major Deegan. Looks like the ride in Westchester, still a very slow go coming up the Hutch. especially now as you go looks like from the Blueway up through the area of 287. In sports, Nets are in Philadelphia tonight. Islanders host Columbus, Rangers in St. Louis, Devils host Winnipeg, Big East tournament, St. John's plays Villanova, plays UConn. Opening day, April 7th, baseball labor harmony. In Major League Baseball, the Players Association reached a deal at 3 o'clock. Bloomberg 11:30, 3-day weather tonight, partly cloudy, low 30. Friday, partly sunny, high 45 to 50. Saturday, rainy, windy, maybe some wet snow, high near 50, and then falling during the day. Sunday, sunny and breezy at 40. Right now, 45 degrees, partly cloudy in New York. With the best ride in and out of the city, I'm Ed Pilecki. This is Bloomberg 11:30, bringing you global news 24 hours a day.
Live from the financial capital of the world, broadcasting across the globe, this is WBDR New York, Bloomberg 1130.
This is Bloomberg Daybreak Asia for this Friday, March 11th in Hong Kong, Thursday, March 10th in New York. Coming up this hour,
U.S. jobs fall as inflation hits a 40-year high.
Chinese ADRs endure their worst day of trading since the global financial crisis.
And J.P. Morgan and Goldman Sachs lead Wall Street's retreat from Russia.
Russia call for surrender gets nixed by Ukraine. U.S. prepares further penalties for North Korea after ICBM tests. Northeast U.S. prepares for very heavy weather. I'm Ed Baxter with Global News.
News and scores from the EPL. Good news from the Major League Baseball labor talks and the latest from the Players' Championship. I'm Pete Fox. Those stories and more coming up in Bloomberg Sports.
That's all straight ahead on Bloomberg Daybreak Asia, on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Final trading day of the week is getting underway in the APAC region. 9 in the morning in Japan. We've got the Nikkei down just a bit. We'll take a closer look at markets for you in a moment. If you're joining from the APAC region, good morning. I'm Doug Krisner at the Bloomberg Interactive Broker Studio in New York.
And I'm Juliette Farley in Singapore. Bloomberg Daybreak Asia presented by Interactive Brokers. Interactive Brokers charges margin loan rates from 0.75 to 1.58%. Rates subject to change. You can learn more at ibkr.com/compare. Let's get a check now of market action after we had that hot inflation print in the U.S. with Bloomberg's Brian Curtis. Brian.
Yeah, we'll get to the U.S. in a moment. Obviously, the big 40-year high in inflation is big story. In Asia, the Nikkei's down about 200 points. It gained almost 1,000 yesterday. So I would imagine that some people are saying, well, this isn't so bad. Down 0.8%, but what an up day we had yesterday. The ASX 200 this morning is off about 1/3 of 1%. The Kospi is down about 0.8%. For the S&P 500, that index finished well off session lows, but it was still down. Tech stocks led the retreat. We had the NASDAQ down just under 1 full percentage point. But Chinese stocks listed in the United States fell 10%, and we'll get you further details on that in a moment. Just looking at 10-year Treasury Yields here, they rebounded up to levels that we saw back in late February, up over 2%. We've come down a little bit from that. Right now, the yield on the 10-year is at 1.98%, the 2-year at 170. So spread between 2s and 10s there, 28 basis points. Oil dropped below $107 a barrel, but it's inched back above now. So right now, WTI is at 107.44, gaining after edging lower during the U.S. session. Still just about everything about high inflation and Russia's invasion of Ukraine. I wanted to mention AIA Group's new business value jumping more than estimated 22% last year. Seemed quite unlikely. It was better than expected because it's been a tough period for Hong Kong. And also the AIA board approved a stock buyback of $10 billion over 3 years. Doug, to you.
All right, Brian, thanks. Well, as we mentioned earlier, U.S. consumer prices accelerated to a 40-year high last month. Now, the primary drivers were gasoline, food, and rent. Gasoline prices alone accounted for nearly 1/3 of that monthly increase. Now, this data may have been in line with estimates, but Bloomberg's Michael Mayer, this is not the whole story.
In a sense, the economists have this right, and the problem is
Of course, this is all February data, and the war in Ukraine did not start until February 24th, so it doesn't encompass most of that.
It's kind of looking in the rearview mirror, wouldn't you say? So this war in Ukraine is adding a lot of uncertainty to many things. The commodity markets, yes, but also the Fed's rate hiking cycle. Now, Fed officials could become a little more hawkish if energy shocks do lead to higher and more persistent inflation. Fed Chair Jay Powell has already said he will recommend a 25 basis point hike next week at the March meeting. Jules.
Well, Wall Street firms retreating from Russia. Goldman Sachs, the first major U.S. bank to announce its pullout. Bloomberg's Shruta Najaran tells us the move is more than symbolic.
While its onshore operations may have only formed a small part of its global business, but Goldman Sachs saying that in the coming days, weeks and months, it will be trying to wind down its various market contracts as well. That extends beyond its presence just in Russia. A lot of its trading contracts and counterparty deals that it would have set up with various non-sovereign entities tied to Russia.
And meanwhile, JP Morgan says it's currently engaged in limited activities in Russia. The bank is closing out pre-existing obligations.
5 minutes past the hour as we update global news. Regrettably, no progress to report in the meeting of foreign ministers today in Turkey. That meeting between Russia and Ukraine. Ed Baxter covering it all from the San Francisco newsroom. Eddie?
Yeah, regrettably is a good word for it, Doug, because there was some optimism leading up to this for the past couple of days. It was the first talks between Sergei Lavrov and Dmytro Kuleba. Kuleba says totally unacceptable demands from Russia, though.
They will continue their aggression until Ukraine meets their demands. And the least of those demands is a surrender. And this is why it's not why it is not acceptable to us.
Yeah, he says he asked for a humanitarian ceasefire to clear parts of the country. He says it appears only Vladimir Putin can make that decision. Meanwhile, reports that nearly half of the population of Kyiv has left now. And the mayor of Mariupol, Vladimir Klitschko, says the civilian casualties are absolutely heartbreaking.
The most unbearable casualties are the children. Children are dying, but it doesn't now. At home, in their houses, or in the road sick side.
Yeah, meanwhile, there is the threat that Russia may use chemical weapons. U.S. CIA Director Bill Burns.
This is something, as all of you know very well, is very much a part of Russia's playbook. They've used those weapons against their own citizens. They've at least encouraged the use in Syria and elsewhere, so it's something we take very seriously.
Burns says so far no reports of chemicals being used. EU leaders met today, and EU Commission President Ursula von der Leyen says the major takeaway.
We will rethink energy. We have to get rid of the dependency of Russian fossil fuels, and for that we need massive investment.
Yes, she says mostly in renewable energy. The U.S. is preparing new penalties against North Korea after it says it determined that Kim Jong-un tested new ICBM technology in the missile launches February 26th and March 4th. It is looking at blocking the purchases of foreign technologies. It also says it fears Kim is disguising satellite missile launches to test further weapons and ICBMs. Powerful storm moving toward New York City and Boston, combining with another front moving up from Alabama. That's a lot of land in between. They're joining, they say, meteorologists say, to form what they call a bomb cyclone. The entire Northeast is forecast to get drenched, and the hope is that the winds will not become unmanageable. In San Francisco, I'm Ed Baxter. This is Bloomberg. All right, Doug.
Thank you, Eddie. Let's get to our guest. Olivier Dacier is with us, head of APAC Applied Research at Contigo. He is on the line from Singapore. Olivier, thank you for being with us. It's always a pleasure. A lot of volatility in markets. I mean, a lot of the focus has been on fallout from the war in Ukraine as it manifests in the commodity space. We've seen the price action not only in crude oil, but things like nickel and wheat. We've also seen a lot of upward pressure on Treasury yields, particularly across the U.S. yield curve. Very tricky markets to have to navigate. What's your strategy under the current situation?
The current situation is clear that, you have to buy on Mondays, sell, buy on Mondays and Wednesdays, sell Tuesdays, Thursdays, and then on Fridays, stay home and watch the news. That's about as much as we can forecast, because every day the situation is changing. We're caught, investors are caught between At the very beginning, they underestimated how long this conflict would last and how deep it would impact the global economy, especially commodity prices. And so gradually they've been adjusting their positions to that. But as they adjust, the situation keeps on moving. And it becomes clear every day that there's more downside than upside potential. So yesterday we thought maybe those foreign ministers could agree to something, to some kind of ceasefire at their meeting in Turkey. Today we find out that's not the case. And now we hear thoughts about maybe chemical weapons and things like that. So the situation is worse today. It's an opposite. So we're on the risk on, risk off, almost on a daily basis right now.
And it's, of course, questioned what sort of central bank action can do as well, just at the moment when we're looking towards tightening. Do you think that's changed with what we heard from the ECB, that basically central banks are going to continue on the path that they're already on?
Yes. I think for investors back in December, they already feared that central banks were falling behind the inflation curve, so to speak. This war has only raised the curve, so they are even further behind now. When we look at these inflation figures that come out, the problem is, yes, oil or energy is still one of the main drivers, but there are other parts of the economy that are also driving up prices. Rent is one of them. Autos and trucks in the U.S., which was a big driver of inflation in the last few months, eased up last month, but it's going to raise again because Russia is a significant exporter of palladium, which is used for catalytic converters, and Ukraine is a big producer of nickel, which is used in all the EV vehicle batteries. So we're probably going to see some price hike from those kinds of sanctions come up and push that up again.
Yeah, most countries, by the way, are heavy exporters of neon, which is a gas used in the etching of semiconductors. I think it's fair to say at this point we're looking at much slower growth globally. Are you worried about stagflation?
I'm not so worried about stagflation yet because the bulk of the supply chains can work around that. We're just talking about oil and gas for Europe and some of these individual metals, which hopefully can be increased somewhere else. We don't know that yet. We haven't had these discussions. But I think it's too early to say stagflation. There's definitely going to be inflation, and central banks are going to keep raising the rates as they have said. They might take a more gentle slope because of the uncertainty in the market, but they have to do it. It'll be worse next year if they haven't, so they need to do that.